Scott Bauer at Trading Advantage joins us now from the trading floor. This is a big week for traders, especially with the Fed meeting coming up.
It sure is.
What do you think is likely to happen?
Well, it looks like the market is really pricing in some reduction in TARP pairs. Some reduction, probably somewhere between 10 to 20 billion a month. If that happens, you may see just a little bit of a sell-off, but then I would think that the market would keep this acceleration, keep the momentum going higher.
Scott, gold was slammed last week. What do you anticipate for this week? There's even a call that we could see gold at $1,000 per ounce or less.
Yeah, and we were seeing a bunch of those calls, over the summer and a few months ago when we saw gold dip, down below 1,200, 1,100. I think that we've seen just this pullback here in the hopes, not even just the hopes, but just the fact that we're going to see a tapering. $1,000, that's really kind of out of the realm, at least in the near future. If someone wants to make that call, for a year, 2 years down the road, that's one thing. But there's a lot of hard stops coming in here in the low 1,200s in gold.
As Twitter moves ahead with its IPO plans, are there social media stocks that you would buy that could get a bounce?
Well, I think you have the camp that's going to be very cautious about Twitter because of what happened with Facebook. And then I think you have the camp that says, well, look at Facebook. Yeah, it took a year. It took its hit. It was difficult, but look where it is now. So I think that social media is back in play. I think that Twitter, I think Pandora, which we've seen last week, boy, we saw that thing up, 15, 20%. I think those are a couple good ones. But social media is here to stay, at least for the short run.
Good point. Thank you, Scott.
Thank you, Ange.